I noted that the balance sheet was down about $368 billion January to January, or about 9% reduction. And if you think about the size of the economy and your comments that you've made about the future balance sheet size, it occurred to me that if, just for discussion purposes, the Fed balance sheet was down at 10% of GDP, so $2 trillion in theory, as opposed to the 6 or 7% it was before the financial crisis, that at this rate, it would take about 5 years to normalize in that range. And as you began to think about the balance sheet, have you all, that would be about 16 years after the financial crisis that the balance sheet would be normalized. Have you, if you look at the rolling off of the portfolio, what range of years do you think it would reach? I know I'm looking for some range of the denominator.
The level of demand for our liabilities, principally reserves and currency, but also the Treasury General Account, which is a place where Treasury keeps cash, more cash than they used to, and also the designated financial market utilities keep their rainy day cash there. The demand for those liabilities is so much higher that we're actually not very far from the level of that demand. And our estimates of the demand, particularly for reserves among the large banking institutions, have gone up quite a lot just over the course of the last couple of years. So in terms of years, I actually think, I think we're going to be in a position, we're working on a plan, in fact, to stop runoff later this year. We may still be a bit above equilibrium demand for reserves, but we're not looking to limit the growth of the other liabilities because we think they meet important demands from the public.
So you're suggesting that sometime this year that you'd have on the asset side, you'd stop letting the securities roll off?
That's right. And so that'll be about 16, 17% of GDP, whereas it was 6% before.
Yep.
And the difference really is currency is a bigger part of currency as a percentage of GDP, and the same thing with reserves.
When you look at the composition, I know you've testified, and Vice Chairman Quarles has too, that you prefer a Treasury-only balance sheet, and you've heard discussions in this committee previously where we recognize in periods of crisis that the Fed might take other assets, but that many of us believe they should have swapped those back out over at the Treasury so that the central bank only maintains a Treasury portfolio. You still hold that view, and what's your view of Mr. Quarles' comments last week that he would look at limited sales of the CMBS portfolio?
We have said that we want primarily a Treasury balance sheet. We've also said that we hold the possibility out there that at some point, and this isn't something we've decided, it's not something in the near term, we would do limited sales of MBS to hasten that process along. I think where we are with the balance sheet is we have a bunch of decisions to make, and the one on MBS sales is probably closer to the back of the line. Really, we have to decide about the maturity composition and things like that. We'll be working through that in a very careful way. Markets are sensitive to this, so.
Yeah, I know the markets would certainly connect with those sales and I think that I would encourage that. I want to switch gears and talk about another UK issue that's not Brexit, and that is the subject of open banking, the UK's Payment Services Directive, which is also termed informally as open banking. And I'd like to get, if not your thoughts today, get your thoughts in writing about the promise of open banking as benefits for more competition. And this is where consumers have access to all their data, brokerage, banking, that they get to control. It's a way to have better data security and more consumer security. It's been required now of the major banks in the UK. Are you familiar at all with that?
I'm not familiar with the UK aspect of it. I'm familiar with the fact that it's a very interesting and important issue here.
I think as we look at fintech in our markets, and as we look as ways to level the competitive playing field between the G-SIFIs and everybody else, this will be an emerging issue, and I'd invite your comments in the future about that.
Thank you.
Thank you.